It's the Canada's Podcast Network.
First of all, wearing the venture capitalist hat is founder and managing partner Mike Winterfield of Active Impact Investing. And of course, wearing the angel investing hat today is Grant Lawrence of Valhalla Angels. And Jill, I've just put you under the niche umbrella of niche funding because you wear so many hats and I've had so many different platforms that you've represented in the past. And you're currently CEO of Women's Enterprise Center here in British Columbia. Tell me how you know each other.
Mike and I met at Founders Institute. We were brought in as mentors and presenters to help the brand new startups. So we hit it off there. That was, what, 8 months ago? So it seemed like about 8 months ago. And Jill and I bumped into each other. Jill, I was trying to remember when we first connected at a forum in Kelowna, or
I think
somebody introduced us.
We might have been. I think Laurel Douglas actually introduced us.
Oh, okay, Laurel.
Like probably close to 2 years ago, maybe.
Yeah.
Which is great, and you've been so supportive of trying to engage more women to participate as angel investors.
Yeah.
So really, I've appreciated that. Yeah, and then Mike and I have known each other a couple of years with a lot of common connections, and a shared passion for social impact and making a difference in the world. So I think, a couple of coffee chats and intention for more.
Yeah, absolutely. I was going to say we definitely did get a direct introduction when I first moved into the world of angel investing and venture capital and impact. But I would say it would have been very hard not to meet Jill because she was basically at every startup event that I went to for about a 2-year streak. So
there we go. Yeah, so shared passions for sure, I think, in this group.
Well, and maybe just a little bit of insight on to each one of your current business venture. What work are you doing? Obviously, as entrepreneurs, we tend to wear multiple hats, but why we're at the table today? What are you doing?
Go ahead, Jill.
Well, I've just stepped into a new role in the last 2 weeks as interim CEO of the Women's Enterprise Center, so provincial nonprofit organization supporting women entrepreneurs with business advisory services, training, and loans. So that's been an unbelievable experience, as you can imagine. Just diving in, thank you, and just deepening our support for entrepreneurs who need it so much more during these difficult times. But as you know, my background and passion has certainly been looking at new models, increasing diversity in the investment sector to better support all entrepreneurs. So so great. It's great to be here.
Well, and let me respond too, is I never actually received financing from Women's Enterprise Center, but I've been a mentor with Women's Enterprise Center before. And the reason I stepped up when asked at the time was I was super excited to that this was a funding partner legitimately that also offered mentoring in the side. And that was one of my natural attractions to Women's Enterprise Center. So
it's such a powerful combination. I think Grant and Mike would say the same because they're both wrap their arms around entrepreneurs as well. But I think it's not just about the money. It's about so much more, and those additional services, support. And sometimes you don't even need the money. It's about the additional support, and then you need the money later. So it's such I feel like Women's Enterprise Center is still a bit of a hidden gem for some companies around the province.
Mm-hmm. Mm-hmm. Grant?
Sure. So we've gone on, obviously, our forums, which were monthly in 4 cities, bringing together startups and angel investors, has moved online. By chance, we'd already been doing some online combination of in-person and online with investors that had said, hey, how do we join? But we live in Whitehorse. It's like, okay, you're not flying down anywhere monthly to meet. So we did already have some good experience there. This week we did all 4 cities in one, and we had over 115 people online. So it was a pretty busy session. So I think that's indicative, leading a little bit into the financing side of the interest of the angels. We'll see what happens in the next 30 to 60 days if they still are writing checks. And I went and did some research for this. I can give you some history of what happened during 2007 and 8, and also 2000. During the 9/11, if you want to dive into those. So we do have some historical information we can look back at.
Absolutely. Let's go back and reminisce a little bit about past experience and how we can learn from it. Mike, what are you doing right now?
Well, so as Grant mentioned, the way that we met was through Founder Institute. So I do some work to support a handful of different accelerators and incubators, Founder Institute, Spring, CDL West, New Ventures BC, and a handful of others. But I do that mostly to stay as close as possible to the startup community. My day job is as you mentioned, as the managing partner of Active Impact Investments. So we have $10 million in assets under management right now, and it's an impact VC. So we're a certified B Corp based out of Vancouver, and we're deploying money for the most part across Canada, although we are flirting with our first US investment right now. But certainly it's a coast-to-coast coverage in Canada. Been operating for about 2 years now, and we have made 8 investments at that time. And our investments, the single most important and first criteria is that they have to solve an important environmental or social issue.
Pretty apt right now, actually. Can I take a moment? I'm going to delve straight into Grant and I, when I was talking to Grant, probably the one question that is pressing right now is there money right now? So cash flow is king, right, for business. So is there money out there right now in any of your pots that is not yet deployed? What kind of dollars are we talking about? And what is the probably most important way to connect with you in order to maybe have access to it if there's anything there?
Certainly. Go ahead, Mike, or
You go, Grant.
Go ahead, Jill. So if I look back at our last calendar year, and we're very transparent, we self-report, and we have it up on our website. I think we did about 8.7 million in funding, and I can't remember the number of deals. I want to say 34 or so. My expectation is we're going to see that drop a little bit, but people are going to focus in on what businesses are going to thrive during this COVID. What's it going to look like in the months ahead is an unknown. So we had, for instance, one company come through that's automating the whole online process for brokers to sell insurance. Well, nobody's walking into an insurance company or storefront to go and do insurance, and it's all over the phone or electronically. So they've started this just start to explode a little bit, which is great. So they're taking advantage of it. So we'll see money moving into those sectors. The ones that are going to be hit, we've already seen: restaurants, anything that's gathering of people, shows, trade shows, concerts, etc. And they're all trying to adapt. So we'll see. I think we'll see money still flowing in. And historically, during the last recession, the companies that were created there ended up in the Fortune 500. About 250 of the Fortune 500 are from the last recession, is the figures I've been reading.
Wow.
Yeah, so this is a time and opportunity for people to take advantage of, both the founders, if they're going to do a pivot. Cash is king, of course. So they're having to make their runway longer,
Right.
Get their burn rates down, talk to all the important people that are their stakeholders. So that'd be customers. Maybe you can get better terms on receivables if you have a receivable. Talk with your bankers, look for liquidity as well. So everybody that touches your company, you need to communicate more with them now. And of course, your staff is critical to be communicating. So from a money point of view, there's also the government. The NACO has been doing a good job. They had a
NACO being what? Sorry?
NACO. They've been doing a good job with their weekly webinars. And this week we had the minister from the Liberals on. We had some different VCs on talking about what they're trying to do, and it ended up being a discussion about what can the government do in addition. So there's lots of points made to help. How do we help the founders that are either just about to start raising money or have just run out of their runway and need that next round?
Mm-hmm.
And I can relate to you some of what took place, but I don't want to take up all of this.
I want to ask as well, you said you've already deployed the 8.7 million. So obviously you have a priority to look after those businesses that are already filtered through as likely to survive. What about what's left? Is there anything left right now?
So you got to keep in mind, we're not a fund like like Mike has a fund, you know, he's got a 10 million cap. So this is all individual angels making those investments and then reporting back to us saying, hey, I invested in this company, or the founder telling us that.
So
Right,
is there an opportunity for perhaps people who had never invested through an angel network before, perhaps because they haven't yet been asked, to actually connect with you and say, hey, listen, I'd like to contribute?
We've actually been in the past 2 weeks, we had like six new members join, and they're all remote. So they all know that we're not doing face to face, and they're seeing opportunities. A lot of them are I think we're seeing two characteristics come out: those that are bold and want to take advantage of it, and those that are conservative. And the bold ones are going, hey, there's an opportunity here early. And the stock market, wow, that took a beating. So I'm not really going to put my money back there necessarily. And so we're seeing new angels come in. And that's part of what we're really trying to do right now, is expand the capital base, given the history of people reducing the amount of money they put into deals and valuations retracting at the same time. Having a wider expanse of more angels, because I think we need to be emphasizing that across Canada. There's more businesses that start up that support our economy and the angels in the startup space than there is the big traditional large companies. They're typically net losers of employees during these recessions, and these startups are the ones that are net contributors to the economy with employment.
It'd be interesting to see with the new funding, the $250 million through IRAP for these tech startups, how that supports the angel community too.
Well, so even just the fact that you mentioned that, Jill, is important. You know, there's $2 million at IRAP funding, right, for tech companies.
Additional
right
250 million additional.
250, sorry.
No, that's okay. 2 million. We're talking bigger numbers these days, right?
Absolutely. So Jill, do you want to just continue? What kind of cash flow do you have? Do people have access through with you
So
now?
we're a little bit different because we're a loan fund, right? So we offer loans up to $150,000 to women entrepreneurs across the province, and particularly focus more on Main Street businesses. So not necessarily those faster growth technology companies. So we do still have funds available. In fact, it's interesting. Of our existing loan clients right now, we have offered relief payments over the next 3 months due to the current situation. They have a choice of either no interest or no principal payment, or both. And of course, most are taking us up on both. And that's incredibly important to give them that runway over the next few months. And we'll look at whether we need to extend that or not. On the other hand, we've also seen an uptake in loan applications. And we're offering a couple of things. One, you can apply now, and you have up to 6 months to actually activate your loan. And that's important while credit is still okay, and planning ahead. So that's really critical. And then we are seeing some businesses who are pivoting and are finding new opportunities in this crisis, and they need funds to activate that. So we have up to $150,000, and then we also we work with BDC for an additional $100,000. And the average loan, though, is about $55,000. So,
and really the key criteria is, first of all, you need to be 51% women owner. Is that right?
Yes, 51% women
and then
owner.
Obviously there's more to it, but if you hit that criteria, then it's worth having a look, right?
Yeah, absolutely. And we collaborate a lot with other financial institutions as well. But as you mentioned earlier, it is wrapped around a support, right? The business advisory support, the mentorship support, training support, and that's so critical. And we have an incredible repayment rate because we work so actively with the clients through situations like this. This just happens to be across the board. But then it's exciting to see some new initiatives by the government too, right? The rent assistance that was announced yesterday, details to follow. But that's something that a lot of our clients will benefit from, as well as the wage subsidy and other programs that are being offered.
Well, and as I walk past all of the bricks and mortar, businesses on my street, I can't help but literally shed a tear as I think about those people who, impact our community so much, what happens on the street in our community. So, Mike, tell me about venture capital. What's out there? What bucket of funding steering into current cash flow is out there, if any?
Yeah, we're so for us specifically first, we're lucky because we raised our money in advance of this. There's some people are trying to raise money now, it's pretty tough. So we have money committed from our investors that we can deploy, and that we are deploying. So we had deployed a little over 3 million of our tents. We have about 7 million in dry powder, and we are continuing to deploy. There's some VCs out there that have kind of pressed the pause button, but we're actually very likely going to do a new deal this month, which would be our 9th investment. So yeah, maybe I can talk a little bit about what we're hearing in venture capital at large, and I would say it might be good to look at it in 3 ways. So the pace of money going out the door, the psyche of the fund manager right now, and then the types of investments that people I think are going to flock to more.
Awesome.
On the pace side, I would say for anybody who's thinking about raising money from VC, just keep in mind it's our job to deploy money, right? So there will be some VCs and private equity funds that will press the pause button, and we've talked to some that are going to for a couple of months and just wait and see what the world looks like. But at the end of the day, all funds have a mandate to deploy money within a certain period of time. And so when you press the pause button, you're not going to press it for a year. You'll press it maybe for a few months, but every fund manager's job is to get money deployed, and so they will deploy money at some point this year. And in fact, it might even create a backlog of some deployment that should happen. And when you think about that from a pace standpoint, venture capital funds actually do want to deploy money during recessionary times. In fact, vintage years of VC funds that have performed the best have been the ones that were able to invest in companies that had reasonable valuations versus, overblown valuations that happened during, really kind of rocky markets. On the second point around the psyche, I think the one thing for founders to be sensitive to and to just consider when they're thinking about valuations is that the way most venture capital funds work is investors have committed money, but that money, the checks haven't been written yet. The money gets called as the fund manager finds opportunities. And so when you think about that, when we do a capital call because we found a new investment that we're excited about, we're asking one of our investors to pull money out of the market sometimes at 20 or 30% less than it was worth a month ago. And so it's very hard to do that if you can't give them confidence that you're investing in something that you are getting that same type of premium, that same type of discount. So I think just for the founders out there that are really trying to hold the line in terms of their valuation pre-COVID, that's going to be a tough conversation to have because there is a pretty tight correlation between startup valuations and public market valuations. And then the third thing, just in terms of type of investment, I would say, read a great article the other day in TechCrunch and couldn't agree more that that we need more camels than unicorns right now. And so the definition of a camel was just companies that display a tremendous amount of resilience. So, we are looking for companies that have a faster path to positive cash flow, companies that have a little more traction, seem a little bit safer, companies that have less financing risk, so they've been able to get sort of well-funded, well-capitalized during this. So, for instance, we'd be a lot more reluctant to go into a small round, a $500,000 round. We prefer to go into a $2 million round right now, where we know that that company is going to have some good runway to be able to achieve some major milestones before they need to go out to market again for more money.
I love that. I think that's going to really, Andrew, one of your questions to jump in is, what's going to change, right? And where are we going from here? And I think we are going to see like that shift a little bit more, that, slow and steady, the resilient companies, obviously, that are going to emerge. And I think that's going to be better for all of us.
Well, then
I think it's an opportunity, actually, and especially I'll have to put my impact plug in here. But we have long believed that there would be more resilience amongst impact companies because people are doing it for a purpose beyond just trying to turn a quick profit. And so I think for the founders out there right now that are saying, look, I'm in this for the long run. I'm ready to fight. I plan on being here a year from now. Oh, yeah. I think I froze up a sec there. For the ones who are determined to be here a year from now, you're going to stand out because unfortunately there are going to be some companies that go out of business over the course of the next 12 months. And there were a lot of those companies that were sort of hard to tell apart from the others when everybody was doing well. The saying that the high tide floats all boats. So I'm trying to talk to some founders about this being a real opportunity for them to differentiate themselves and show that they have the grit that people expected and wanted to see if they emerge out of this 12 months from now.
Exactly. I've often referenced zebras versus unicorns, right? One, zebras are actually real and the purpose and the profit representing the two stripes, right? But the camel in this case also makes a lot of sense. Yeah.
So Mike, you mentioned a little bit of, sorry.
Go ahead,
about
Grant.
the psyche, right?
Yeah.
Both of the investors, the VCs, and then you're just getting to the psyche of the founders and differentiating themselves and hanging around. And I think that's a critical point is, the founders and their key people need to be out of panic mode to restore their creativity. And I think that's where people like yourself, Mike, you talk to your founders and you help them along. Same Jill, same with us, companies that I've invested with, I'm going to be chatting, continue to chat with, help them along, because I want to make sure that their creativity, because that's why I invested in them, is their creativity, their drive, their desire to succeed, and to be able to take advantage of they're always living under uncertainty already. So here's another one.
Exactly. Well, that's it. That's when their characteristics really come out, right? The resiliency and adaptability of entrepreneurs, which tend to be fairly common. So we'll see more of that.
So another important thing to me is how to get from idea to actually engaged in conversation. So I'd like to try and, make sure that pathway is totally open and clear. So Grant, you talked about, another quarterly online event that's hosting. Would that be one of the better ways to try and connect with you? How would that work?
Yeah, so they can connect with me, obviously LinkedIn, email, etc. And then we're running our monthly forums, and we're trying to broaden the attendance a little bit more to new angels. We do have a select number of seats for startup founders, so they can see actually what happens in an angel forum. So then go, okay, now I understand it further. Seeing it versus reading about it, it's a big difference. So we gladly can post information and share information about our ones that are our monthly ones, and people can ask for joining in.
When's your next monthly one?
It's May 12th. It happens at 3:30 online. It's about 2.5 hours long. And I'll gladly provide the information. I don't know, how do you want that?
Perfect. I can just get an email. I'll help
Okay.
that. So that's monthly forum. And then is there a kind of bigger event as well?
So our biannual unconference was going to be scheduled for June, and then we pushed it out, and we're probably going to have to push it out again. I just don't see a break. So that unconference, last time we had it in Banff, it's going to be in Kelowna this time. Probably still will be, just delayed, and then we'll move it to Vancouver. So we'll rotate that. That's a good one. We've also opened up our calendars to have Ask Me Anything sessions. So the first Tuesday, I think that I'll send you the calendar, the first Tuesday of the week, and we have an Angel 101 session for new angels that want to learn more, and then we have a closed session for the members.
Nice.
So we're helping them out further as well.
Of course, I'm hoping that your biannual conference actually becomes virtual.
Yeah.
And we don't lose the momentum on that. But how about you, Jill? What's the best way that both either one-on-one or collectively people can connect with you for real solutions?
Absolutely. Well, womensenterprise.ca, we are hosting a number of weekly training sessions and virtual sort of webinars on key topics around, strength in numbers. So really diving into cash flow and financials, working with entrepreneurs. Those are free. Others on HR and contract issues. So definitely check those out. And we also have complimentary business advisory services, which you can find out more about on the website as well. And then we're part of a larger organization called WEOC, which is Women's Entrepreneurship Organizations of Canada, weoc.ca. WEOC.ca, a number of resources available on that, and includes different organizations within each of the provinces. So that's really critical. Many of them have loan funds as well, but they all have different training and resources. And collectively, we're looking at doing a national online initiative in early May, where we'll bring together all of the experts from different provinces and invite entrepreneurs to join in. So happily, we'll share more information there.
Okay.
And I'm always happy to connect on LinkedIn as well.
Okay, perfect.
Yeah, I should mention, sorry, Angie, and sorry to
Yeah.
interrupt. Like, one other thing that we do is we have something called Founders Base Camp. And now that's gone virtual as well. We're about 1,200 founders that have gone through it, and it's really letting them step inside the shoes of an investor and understand what an investor is looking at. So it's not really there to help you with your pitch. That's an end result. It's helping you decide what is your capital raise plan and what are the impacts on my business, myself, my family with those raise plans, right? So that you can go, okay, if I'm going to have to do 4 raises over the next 10 years at this amount, what does that mean for me, my company, my shareholders, all of that. And with each of those, there's money. The money coming from different sources has different expectations, right? Like Mike, your VC fund is different from an angel person going, hey, yeah, here's some of my private money, versus where you have to have a return for your investors.
Exactly. Mike,
Right.
what about you? What's the fastest way to connect with you?
Our website, usually. So on our website, the first thing that is best to do is just make sure that you meet our criteria. So, you know, we have a very specific box, as most VCs do, that we're able to invest within. And so if you meet our criteria, you can either we have an intake form that you can fill out. It's pretty quick and easy on the website. Or the other thing that people can do that works well is get referred into us. You know, it's nice if you know somebody who knows us or one of your investors is willing to vouch for you. Kind of like to know people who would recommend you.
Great. Perfect. Well, I'm a little bit mindful of time. And one thing I just wanted to ask, Jill, is the Risery still active right now, or is it kind of back burner?
Yes, the Risery is my consulting business, so it's website coming soon. No, it's active, and I'm still doing a number of different projects.
Okay.
So and
Okay.
including I'm working with I just going to quickly do a plug for Ryerson University and the Brookfield Institute for Innovation and Entrepreneurship, talking to Canadian entrepreneurs who have scaled their business over the last 3 years and how they're pivoting. So if any companies are interested in participating, let me know.
Grant, I wouldn't mind just finishing off with some data. You said you could show
Sure.
us a little bit of data about what survives crises and, you know, the bounce back. Where's the bounce back rate? What can you share?
So the bounce back, nobody's really sure we're going to have a slow climb or a very quick V shape, or is it going to be U shape? And that's, you know, each recession has come down at different times, and that was one of the topics yesterday. Was during the 2019-29 recession, the U.S. government took about 1.5 years to implement anything. So the fact that our government's moving so quickly to help, and we keep on seeing new announcements to go, okay, but we don't know how we're doing the intake yet, and we're not sure of all the variables. But to see them moving fast that way is good, and to see the fact that the angel groups have come together and told the government, here's what else we need to be doing. So some of the ideas thrown out there were to provide more, encourage more access to capital's incentives around tax breaks for investors, right? So that's an obvious one. That's a big one. I would also say we look at what the definition of an accredited investor is a little bit closer, so that we can have younger.
Okay.
Like that's part of the challenge, is that the people that have the money to invest are all necessarily a little bit generation older, and we want to get younger people. And we just had our youngest angel join, who's 32 years old. Like, oh my God, good, an accredited investor that can actually ask different questions than all us old white guys.
I think we're going to see some more use of some of the online investment platforms as well. Through this process, we're seeing an uptake and some entrepreneurs asking questions about that, like SVX or Fund Funder.
You know what, Jill? I think that's worthy of a whole another conversation for it, because I know that there's a number out there, and it's still, this resonates with me because you're real people with real tangible things, going back to the core values of collaboration and partnership as means of financing, with which all of you and this means of your respective means of financing offer that, you know, sometimes other institutions don't offer. So that was my goal, was to leave people with the idea that you are super accessible. Yes, there are solutions out there. Make it easy for people to connect with you. On behalf of Canada's podcast, I want to thank you for your time today. And hopefully you'll have a plethora and an onslaught of connections through through some of our networks.
Thanks, Angie.
Great. Thanks, Andy.
Thanks for hosting it.
Good to see you, Jill. Thanks, Mike. Good
See you
seeing you.
soon. Take care.
Okay, thanks, guys. See you later.